Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we're going to talk about the second round results of the Fed stress test, which banks are raising their dividends and buying back shares. We have some earnings from Nike and KB Homes and Constellation Brands to discuss. We also want to talk about, Dennis wants to talk about off-exchange market making. We'll do all that and be joined by our guest, Chris Brecher, who will join the show at 8:35. He was at Simpler Trading. Now he's out on his own at brechertrading.com. Joel, tell us how we're doing this morning in the S&P futures.
Joe Chase says he's not seeing Joel on the left side of the screen. Are we okay? Maybe we'll get it going here.
I think we're good. I see you. I think we're good.
Hey, Dennis.
We're good.
How you doing this morning?
Me?
Yeah.
I'm doing well. Let's go over to our intro, though. I always hide in the background for the first 2 minutes. We're all routine here on the show. Don't break the routine on my Friday, Joel.
Okay.
Get to the routine.
S&P futures are trading in the green by 11.25 points. Pre-market low 1675 leaked very little below the close of 1950, went to 1675, and then took off out by the financials. We'll talk more about that when Dennis comes on. 37.25, your pre-market high. That's your target on the upside. 48 was the high on Wednesday, but I don't think we're going to get there with the end of the quarter window dressing. You have crude in the red by a penny only, made its highest close since July of 2015 yesterday at 73.45. We'll keep an eye on that number. Gold up $1.40 at $1,252.30. Nickel up, silver up a nickel at 16.09. And Bitcoin down 187.50 at $5,880. And Dennis, as we were talking about with Spencer on the pre-market show, at one point, the market cap for all the currencies was $1 trillion. Guys, without looking at your coin market cap, what do you think the market cap of all the virtual currencies are today? Do you think they're 3/4 of that, half of that, or a quarter of that? We will wait 5, 4.
Probably lower.
Our chat knows everything.
Chat, I bet you Spinner knows. Spinner,
they all know. Angie Baby will know. Everybody will know the answer to that. It was too easy. It was too easy of a question.
233 billion. So 700
from a trillion.
From a trillion.
Basically down 70%. Fun tweet if you want to talk crypto here this morning. This tweet is coming from Charlie Balilo, who I follow on Twitter. He's a good follower. Or he's a good person to follow, from Pension Partners. He has a tweet, and I'll just read you the tweet. It says, I retweeted it too, every major cryptocurrency is down in 2018 with an average decline of 63%. So your average cryptocurrency in the last 6 months is down 63%. Yikes. That is not a good store of value.
Jar Jar is saying this has happened before in crypto, that there's been pullbacks.
Sure. You want to know the big, and this, I love this when I get this coming at me. The biggest difference here, though, is when you had crypto and you had these falls from 1,000 to 300 or 200 or whatever it was, all the bulls will cite these 90% falls that we've had before. That was before the masses were in, though. That was before the volume was in. That was when, there's papers been written that it was being manipulated back in the early days. It's a lot different when the masses are all in and the masses are all burned. You have major overhead supply on every single one of these cryptocurrencies. Is there going to be, a couple survivors at the end? Maybe some that come all the way back? Potentially. And is there some sort of value to them? Potentially, like I've said, in third world countries where the currencies are very volatile, where they're unstable, where you've got rampant inflation, maybe there's a possibility of crypto being used in these countries. Do I think it's going to be adopted and everybody's going to be using Bitcoin instead of the US dollar? Absolutely not. So this is why I invest zero in crypto. This is why I've been basically bearish all the way up. So I was wrong all the way up,
Yep.
and I've been right all the way down. So I was shocked, and I feel dumb, like, because my brother-in-law came to me asking me, should I invest in this Bitcoin when it was 3,000? And I'm like, I think it's all air. I don't know how to value it. And I think when the dust settles, I don't think you're going to make money on that. Literally, like 4 months later, it went to 20,000. And he's thinking, wow, my brother-in-law is an idiot. And I felt like an idiot when it's going to 20,000. I was like, I don't get it. But, and now it's come back down. So, it's back at 5,800. But even that, it's still double from when my brother-in-law was asking me about it a year ago. So there's the argument. I mean, there's an argument here still to be made, but I will not be, if crypto goes back to all-time highs, I'll tell you, I will not be participating in it. I didn't participate the first time around. I'm not participating the second time around. I think when the dust settles, when we look at these things a year from now, they are all lower yet again.
I just remember,
my opinion.
Remember when I was holding it before we did the special, and that one day it just took off, and that was the day it printed 20,000. And I was like, I wanted out. I mean, I just didn't, I didn't have any technicals. I didn't have anything. I was just like, I need to sell. And when I couldn't get into my account, I'm like, okay, when I can get into my account here, I don't care where it's traded. I'm selling half of this position.
You couldn't get in your account because it was so busy, eh?
Yeah,
they were crashing the servers. That's insane.
Yeah. And then I remember I sold half, and then I was going to use 10,000 as a stop on the downside. And when it was trading like above that, I just like, okay, I don't want to wait for it to go under. But anyways, we spent 7 minutes on Bitcoin. I want to cover two stocks here for Jazz LeMan in the YouTube chat. The maker of Ho-Hos and King Dongs, Twinkie, TWNK. Dennis, did you know that traded?
It's been a long time since I traded Hostess brands. It used to be under a different symbol though years ago too. But yeah, I did know it traded, but it's been a long time since I made a trade on it. What's the deal here?
I don't see any news. He's just asking for a quick technical, and I just see pretty good support in the area of yesterday's low. It closed at 1362. I see good support there. It doesn't look like a big mover. And then the other one was WDFC. That's WD40, right? So let's take. I mean, I can only give technicals.
I got a bottle of that in my garage.
Yeah. Ooh. Well, let's see. Boy, tight patterns, matching ranges the last 2 days.
What a stock that's been.
Yeah. Yep.
2012 was $40. Today it's 147. Wow. And, a nice reversal day yesterday for it too, after it got hit, ended up turning up and closing near the highs of the day. So I don't know. The trend is still your friend here, and the trend is definitely higher.
Yeah, it just looks like there's a little resistance here. You had the pair of highs at the 147 and 55, 148, and you did get the one print at 149.30, but it looks like there's, just to me, 5 of the last 6 sessions, it looks like someone's trying to wiggle out at 148. So that's what I would keep an eye on the upside here. So let's go to the stress test results. And do you want to do it stock by stock or individual?
Do the majors. Yeah, I do, because they're all obviously a lot of buybacks, a lot of dividends. Spencer, give us the overall take, and then maybe we'll do the major 5 banks.
All right. Well, 34 of the 35 banks passed, the only exception being Deutsche Bank. 2 of the passes, however, there's a couple of exceptions, Morgan Stanley and Goldman Sachs, who passed conditionally, but the condition is that they aren't really allowed to raise their capital return plans too much. They have to keep it in line from where it was last year. So while Morgan Stanley did raise their dividend, they weren't allowed to buy back as much as they wanted to. Goldman Sachs wasn't allowed to raise their dividend as much as they had hoped. So everyone else was passed with flying colors. Those two were kind of like mixed. So and like I said, Morgan did increase his dividend. Goldman is buying back stock. So they are, returning.
They're buying back stock anyways.
right. They're doing it anyway, but
they were limited with how much.
Yes.
Maybe they didn't get to buy back as much as they wanted to buy back.
Exactly. So
what was the buybacks on Morgan and Goldman?
All right, Morgan. So many headlines here to run through. Okay, Morgan was a $4.7 billion buyback, and they raised their dividend from 25 to 30 cents. Okay. And that starts Q3 of this year. Okay. Goldman, the buyback was up to $5 billion and $1.3 billion in total dividend payouts. So I think they were disappointed with how much they were allowed to pay back in dividends, and Morgan was disappointed with how much they were allowed to pay back or buy back. But everyone else passed with flying colors. If I can run through just
dudes like Citi, Bank of America, Wells,
just the biggest names here. So Citi,
because it's 35 time. We don't have time.
No.
Let's do Citi.
Citi raised its dividend substantially, 32 cents to 45 cents per share, buying back $17.6 billion over the next 4 quarters, starting next.
How much buyback?
$17.6 billion.
Wowzers, that's a huge one.
JP Morgan dividend raised 56 to 80 cents a share, buying back $20.7 billion.
Wow.
Wells Fargo dividend raised 39 to 49 cents per share and buying back $24.5 billion. And those were the big 3.
Those are some of the biggest buybacks
That's a lot.
I think I've ever heard of, at least in the banks. Like, wow,
I was gonna say,
those are huge. It's not surprising that these things, were catching big lifts last night. The trading action was very interesting. So I traded these and was trying to trade them on the headline. And initially, Goldman and Morgan got smacked. Goldman dropped like $4 right on the initial headline, but then they came out and they were buying back stock anyways, and then they rallied it all the way back. Morgan was the same thing. They hit it on the initial headline, and then they rallied it all the way back. Citigroup, interesting enough, rallied and then pulled back and was trading flat and actually slightly down. And I was like, is this for real? Are they going to hit it on this? And then I got scared because I actually wanted to just play them long just for the bounce. And then I got scared and I was like, I don't know. So I backed off, and then it ended up catching a bit and really going higher. So maybe some nervous Nellies got in there, but that was very interesting trading action there on these banks. They whipsawed around a lot, especially the Goldman and the Morgan. It really got hit hard, and then it rallied all the way back, and then they were down, and now they're trading up. It's been, what do you call that, the accordion chart there after hours on Goldman Sachs, Joel?
Yeah.
That's kind of what it looks like, really bouncing around. Wells kind of went straight up. Wells was just bid immediately. I mean, the buyback was huge. That was a no doubter. It got bid and just kept getting bid, and it's getting bid now. It's up 3.67%. So big moves here for the banks. They absolutely need to have a good day and hold these games.
I was going to say.
And I think they do. I think we got a lot of things working in their favor. First, these are huge buybacks. Secondly, they have been depressed stocks. We're getting a lot of people coming in and saying these banks, now is the time to buy. So you have those people coming in. Third is we have the end of the quarter, and they like to pump stuff up on the end of the quarter. I predict a pretty good market day. I was saying that yesterday, was why I did not want to be short into this, and why I did not want to be short the overall market was the simple reason that I thought Friday was going to be a good day for the market. I did not see the reversal coming Thursday. I thought it was going to come Friday. So it came a day early there with the overall market. But you got a lot of things working in their favor. Question is, what happens after this week?
Full disclosure, I rented some Bank America overnight here on the long side, and it was just nothing because the chart just looked horrible. And I figured, hey, if they hit it, I give myself some time. Maybe we'll rebound. Not going to be real trigger happy on this one because I have a lot of time on this, but popping over $29. I'll do the technicals here. Trading at the highs of the pre-market session. Really, the really big level here is $29.50. You do have some highs just under 29, but you have 1, 2, 3, 4, 5, 6 highs at the 29.50 level. So until we get up and clear 29.50, I'm not going to get real excited about this on the long side, but nice little pop overnight. Goldman Sachs didn't mess with that one at all. Man, you got a level to lean on. If you think this is the bottom here for a swing trade, 220, nice round area. You got a lot of support there. 1912 was a low of the move, trading at 225. So if you're trying this for a swing trade, you're buying at 224, 225. Maybe use 218, 217 or something for a stop. Give it a little bit of room. Citigroup, that was up much higher. It's up $1.
It's come back.
It's holding on. It's not giving it back to games.
Hit and it came all the way back.
Yep. So, the XLF, a little bit slower of a mover. That's trying to get off the mat. That's trading up 31 cents. Let's see this clear 27. You had a high at 27 even on June 25th.
Yeah, so very interesting trading action with the banks. I still am sticking with my thesis long-term that I'm still not buying any of these banks long-term. But the bounces are nice to play. I know you took a flyer there, Bank America long going in, Joel. You're probably glad you did that. I wish I would have too, because I talked about, them bouncing into this, and I was saying I think it's going to be a bounce to short, but, I was predicting a bounce. Why didn't I should have just played it long, and then, been selling here now and, been pretty happy about it. So kind of kicking myself that I did not really play it long ahead of the report. I did buy a few banks after the fact. And obviously some of those are trading higher here, so that's going to work out for day trades. Again, I'm still a little bit concerned long term. I know they say, oh, they're well capitalized now, they pass all the strength tests, the stress tests, there's no worries out there, but I'm still not a big believer here long term. I think there's still some issues, so we'll see what happens there. But I think this is a great opportunity if you were looking, or if you were along these things.
I know.
A nice opportunity to book some gains.
I think today's a big day, not only for the financials, but I think for the markets too, because you're going to have some window dressing. Are the institutions, are they going to be buying at the end of the quarter?
I think so.
Yeah.
And I just want to interrupt you for that. I think today is going to be a predictable up day. I think Monday, when we reopen, is the big day. What happens after we get the pump? Because it's been predictable trading lately. I mean, it was kind of predictable that these banks, down 12 straight days in a row, would probably rally the day ahead of the stress test results when they're going to potentially be doing buybacks and dividends. I mean, we already knew the majority of them passed. They said that last week. So you knew there was dividends and buybacks happening. So it wasn't, completely a shocker that they rally yesterday ahead of it. And now, we get the continued because the buybacks are just so big. So I think the real, information comes next week. What happens? I think they hold the gains. I think the market rallies today, because why not? I mean, it's the end of the quarter, window dressing. I mean, it's summer, months here. They'll pump it up, and it's a matter of what happens next week. Can they hold the pump?
Angie, baby, she's saying triple D. Most traders are away next week.
Exactly. So your liquidity is going to be lower, which means stocks can move more quickly. This is one of my other arguments too, Angie, baby. When traders are away, you can have bigger moves because liquidity is less. So if they pump it up today and then everybody goes on vacation next week, what happens next week? Is it just going to be a boring week, or do we have some sellers that come in and then there's maybe not the buyers there to help it out? So I think Monday, Tuesday is still very important, even though it's going to be a holiday week and we got the close on the markets middle of the week on Wednesday. I mean, even though it's a holiday week, I think it's an important week for the markets here too. We have definitely got a bull bear battle here. It's a tough market to call here now because S&P's, hey, they held the lows. We put in all those highs back in June. June 12, 13, 14, 15, where you put 4 highs in the same area around 279. Then we basically lost 100 points. And we put in 3-4 bottoms here in the same area, 268, 269. So I'm talking on the SPY.
Yep.
So I mean, you kind of now, it's been 2 lines drawn up here. We know where the major resistance is up there, where we failed up in June, near 280 on the SPY, 279, and you've found some support here, 269. So now you just trade the range until that range is either broken to the upside or broken to the downside. So I'm going to go market neutral here right now, saying, I don't know, we're in the range here now. So now as we get up to 278, 279 SPY, I'm a seller. Maybe get down to 268, 269. I think I play it from a buying perspective. But I think, the short play, the easy money on the short side has been made. And that was made, when we got bearish there 3, 4, 5 days ago, and it's come in. Now it's a different story, and I've, now trading market neutral.
Dennis, Spencer and I discussed, I know Wednesday is the 4th of July here, but you're going to have to do a show by yourself on Wednesday. I mean, it's not a holiday in Canada, so.
I have to work Canadian and U.S. holidays.
Yes,
I'm the guy that doesn't get holidays.
So tune in.
I'm not allowed.
We'll teach you how to do it.
Wait, when's Canada's birthday? Canada's birthday is like tomorrow or Sunday?
July 1st or something?
Dennis?
Yeah, it's the 1st.
The 1st.
So
I don't know. I was asking.
Monday?
Yeah.
That's 30, 31. Yeah, Monday.
All right.
Happy birthday, Canada.
Just checking.
Okay, we finished up the stress test results. Dennis wanted to do a little educational segment today. We always try and, besides talking the market's potential setups, we like to do a little bit of education. And Dennis, we'll let you do a little market structure.
Yeah, so bring up this. I put this together last night. I tweeted out too. If you follow me on Twitter, you might have already saw it, but I want to just talk about it on the show here as well. So interesting trading action in DRRX. I forget who it was that brought this to my attention, but somebody on Twitter that just said, is something going on? DRRX is trading up 20% after hours. And I look at it and I was like, oh, no. And right away I can kind of tell what's going on, but I want to use it as an educational segment. So there is, and can you bring this up so we can actually see it? There are delay, but I want to wait till the chart's up before I actually start explaining stuff. So Spencer's bringing it up here right now. Slight delay. Anyways, the stock closes at $1.58. Somebody tries and somebody bids 100 shares at $1.89. So it's closed at $1.58. Somebody bids for 100 shares at $1.89. Everybody would think automatically like, well, you know, there's no news on this. Sell that. It's 20% out. You know, it's only 100 shares, but basically just sitting there. You know, it's a free $30 if you hit the bid. So anyways, it sits there for a long time. Nobody's hitting it. But if you look, there's all these offers at $1.90 if you really blow it up. What are all those offers doing at $1.90? They're trying to hit the $1.89 bid, but they can't hit it. Why? Because they are trying to sell it short. And because the alternative uptick rule is in place, and the alternative uptick rule is in place whenever a stock falls 10%. If a stock falls 10% on any given day, you cannot sell it short on the bid for that day, the remainder of that day, and the following day. Well, if you look at DRRX, it fell over 10% yesterday because it went from $1.73 down to, I believe at the lows, it went down to $1.51. And actually the day before, it was $1.30. So the alternative uptick rule was in place. So you can't short it by hitting the bid. You have to short above the bid. So everybody's sitting there trying to sell. And I actually knew this right away because I tried to hit it at $1.89. So I didn't even hesitate. I was like, I'll hit that at $1.89. So I tried to sell it short. I'm like, oh, I just went on the offer at $1.90 because exchange won't allow you to hit the bid, because that would be in violation of the alternative uptick rule, which is in place as of yesterday for 2 days. So everybody gangs up. I call it piling on. You can see all those offers. You know, there's 3,100 shares on NASDAQ, 2,000 shares on ARCA trying to hit the $1.89 bid, but they aren't allowed to do it because of the market structure. So it sits there, and it sits there for a long time. It sits there for 3, 4, 5 minutes. Then you see some trades happen. This is the interesting part. You see some off-exchange trades happen. 4,000 shares at $1.8901, 2,300 shares at $1.8901, another 100 shares at $1.8901. So 6,400 shares trade a sub-penny above the bid. What that is a retail trader just basically coming in and selling it, and they probably can't market short. It's probably somebody who's actually a natural, who actually owned the stock, trying to sell the stock and getting price improvement above the $1.89 from some off-exchange market making program that obviously didn't know what the hell it was doing. So you have a lot of off-exchange market making programs that will step ahead of the bid automatically because they think they can lean on the bid. Well, this one isn't programmed very well because only a 100-share bid and 6,400 shares they bought ahead of that. So if you add that up, the stock is trading and offered at $1.60 right now. So if you add up, you know, the 6,400 shares that this off-exchange market making unit bought at $1.8901, they basically just threw away $2,000. You know, you can just do the quick math. If the thing opens at $1.58 and it's offered at $1.60 right now, so I'd imagine it's going to open at probably at $1.58 or $1.60. 6,400 shares times, you know, the $1.8901 minus the $1.58, the 30 cents difference is $1,984. So interesting, 100-share bid caused the market making unit of this off-exchange market making unit to lose $2,000. And that's all caused because we have this alternative uptick rule in place that wouldn't allow the smart money to actually hit the bid. So it literally sits bid there forever at $1.89 for a long time. You can see it trades out like 20 minutes later. Finally, a natural comes in, somebody who actually owns the stock and actually hits it at $1.89. So it sits there for like a half an hour at the wrong price. But because we have all these special rules in place to protect the little investor with the alternative uptick rule, this thing is mispriced for 30 minutes. Imagine you were somebody else and saying, oh, it's up, I'm going to buy $1.90. You just totally got, you know, screwed, because it would never have been at that price for more than a couple of seconds. So here it is in Market Structure Geeks. You know, this is my argument against having an uptick rule. You hear Jim Cramer say it all the time, bring back the uptick rule. The uptick rule causes problems like this. And the alternative uptick rule is way worse than the original uptick rule, because the original uptick rule, you only had to sell short on an uptick. On this, you have to, it's not even, you can have an uptick. This was an uptick at $1.89. It didn't matter. You have to actually sell it short above the bid. You can't hit the bid to get short. Horrible rule put in after the financial crisis in 2010. and it just causes pricing inefficiencies and mispricings. This stock was literally mispriced last night for 30 minutes. Some market maker got screwed for $2,000, all because of, a rule that shouldn't exist in the first place. That's my rant. There is a conspiracy theory here too. And it actually is not even that much of a conspiracy theory. As I'm talking about, somebody just bought $1.60 on the stock in the pre-market. But I'm not saying, I don't think it's just going right back up. But there is also the possibility that this $1.89 bid, and this is a little bit, I don't think this is the case, but it's possible that the $1.89 bidder knew exactly what they were doing. And they actually bid for 100 shares at $1.89, knowing that only a natural seller, somebody actually owned the stock, could hit them. And then they went to their retail account, or had a buddy go to the retail account, turn around and sell it, and sell their stock to, trying to hit themselves, but knowing an off-exchange market making unit might actually step ahead of it. So basically saying they bid it to try to get the price artificially high so that they could turn around and sell it to that off-exchange market making unit. That is the conspiracy theory that could have happened. I think in this case, it probably was just somebody misinformed, bid it too high. Nobody could hit it. Somebody tried to hit it from a retail brokerage account, got a whole pile of stock done up at $1.8901, and the market making unit ate $2,000.
All right.
There you go.
Dennis,
it's a little education for you.
Here, simultaneous comments. JJ Budd in the YouTube chat. The dirty details with Dennis, my favorite segment of the show.
And then, and you have a lot of people that would look at this and say it hits filters when it all of a sudden $1.89 is bid up, it'll hit filters. And actually I think there was as soon as the first off exchange trade goes, it would hit it's trading up 20%, so it hits people's after hour scanners and they look at that, they're like, whoa, what's going on here? Sometimes there's nothing going on, sometimes it's just mispricing. So if you are looking at a stock trading significantly higher and there's a whole pile of people on the offer right against it, and it's got the alternative uptick rule on, don't buy it because it's probably mispriced. I see this happen a lot where a stock will actually get mispriced because nobody can hit the bid, and you have to actually have somebody that actually owns the stock to be able to hit the bid because you can't sell short on the bid. Horrible rule. I'm all against the uptick rules. There should be no uptick rules, no alternative uptick rule. Just for fun, they, and this is another fun fact too. Back in the financial crisis, when we had the whole, I think I might have said this a couple of days ago, when they had the whole world, against shorting stocks, and they were believing there was, that's the whole reason for people were actually believing that the financial crisis was caused by people who were just shorting stocks into oblivion. It wasn't caused by that. It was caused by people loaning money to people to buy houses who didn't have the money to make their first mortgage payments. That's what caused the financial crisis. So anybody who says it was short sellers that caused the financial crisis is just ridiculous. So fun fact, they banned shorting on the financials for 3 weeks during the financial crisis because they didn't want them to be able to knock them down anymore, just in case it was shorts causing the financial crisis, which was absurd. In that time frame, in that 3 week time frame, the market was down 18%. And the financials were down 23%. So you can see the financials fell farther than the overall market, despite not being able to short them. Shorts keep prices in line. We need shorting in this market.
Spinner said you didn't know Dennis traded crap like that. And if Dennis can make a couple $1,000, he's going to trade it. He doesn't care what the symbol is. So
that hit my filter. Or actually, no, it didn't even hit my filter because it's too small. I don't usually have penny stocks in my filter, so it didn't hit my filter. I usually, how I usually stick with like the Russell. I stick with the higher widely traded stocks. But I was on my Twitter feed, and I forget who it was. It was like Biotech Run Up or somebody. And he just said, this stock's ran up 20%. I was like, I'll bring that up. And I was like, oh, it is. And I was like, I don't see any news. I'll hit that bid. And I go put on the offer right away. So as soon as I go to hit the bid at $1.89, I'm on the offer $1.90. I was like, I already know what's happening. That's why I wanted to explain it to you guys this morning, so you know as well. I know immediately as soon as I get thrown on the offer, I'm like, oh, I'm piled on with everybody else. Everybody and their grandma is around 5,000 shares worth. They're trying to hit this 100 shares. Can't do it because of the alternative uptick rule. There to protect investors, and here it's causing some market making unit to buy a stock 20% too high after hours, but that's supposed to be used to protect the investors.
Dennis, and I'm not recommending this, okay? And I know you want to do it, but you could have lifted the 190 offer and then hit the 189 bid.
No, you can't hit the one. Yeah, well, then you're not making any money with that.
If you buy 190 for 100 shares and you hit 6,000 at 189,
you can't hit 6,000. You can only hit 100.
What if
You
you?
could you use
Oh,
there was a retail brokerage account. Somebody sent that order through a retail broker. My orders don't go through a retail brokerage. I'm
gotcha.
on the
Okay.
exchange. My orders go direct to the market. So, and if you are going and intentionally, trying, and somebody might, if this was intentional, I mean, they're bidding 100 shares to hit 6,000. That is illegal.
Illegal.
That
Yep.
person is in trouble. So if that was intentionally done, that can actually get you some heavy SEC fines and potentially jail time. I don't think it was intentionally done. I think it was somebody accidentally bid the stock too high. Nobody could hit it. Somebody maybe, and if you're smart enough, you have some shares and go to sell at $1.89 after hours, and that gives you a price improvement, good for you. Whoever got sold up there, good job. I mean, good job, selling the stock and selling 6,000 shares up there at $1.8901. The market making unit got burned. Somebody made that money, though. So you're right. Some retail trader that was probably just trying to hit the $1.89 bid saying, I'll sell my 6,000 shares at $1.89. All of a sudden got price improvement and they were partying in the streets.
All right, Nike earnings.
Woo-hoo.
We got to go to Nike earnings here because we only have 3.5 minutes before our break. Nike making a new all-time high. How did they do, Spencer?
Nike reporting, yesterday after the bell, Q4 EPS 69 cents versus a 64 cent estimate. Sales 9.8 versus 9.41 billion dollars. So a beat on the top and a beat on the bottom for NKE.
And if you look here at NKE, that is a huge move. But you know what? It felt like a huge move at 75. It felt like a huge move at 76, 77, 78, 79. I mean, this is traded heavy volume. This thing's holding the gains.
Oh, boy, it sure is. And, we talk about different patterns in the pre-market and after hours trading. This is not backing off. I mean, we are
Not
trading at the highs of the pre-market session. It's 79.46. Dennis, what's the offer?
On Nike, 79.48. It's tight market, 79.40 to 79.50. It's right there. It's tight market. You get that within a nickel dime here right now. Easy to sell, easy to buy.
80? 80? Is that a number for you?
I think Nike. Oh, you know what? I didn't log into my other system here yet. Oh, yeah, I am. Hang on. Let's go look in the book. Let's go see. It's always fun when you start seeing ducks make new all-time highs. Let's see what's in the book.
I forgot to mention
these are tools you got to have, guys. All these one-trick ponies out there. You know what's bothering me here lately, and I've seen this happen multiple times. They don't open the books on some of these things that early. Nike's book isn't open yet. So I've got the GE book here. The Nike book, the market maker is obviously not as post yet. He hasn't opened the book yet. So I can't see what's in the book because whoever is making who's ever operating the Nike open book is not opened it yet. At least on my platform is not open yet. If anybody can see the open book there, let me know what's in there. I would assume there's some size at 80 to choose through though. So I think that would be the first stopping point for it. But choose through that, who knows?
I forgot to mention a $15 billion buyback.
Huge.
I mean, this one, you saw what Tiffany's did the other day. Keep an eye on that pre-market high, whatever that is. Look for additional follow through that level. Spinners looking at some sympathy plays here. Foot Locker, that's getting a little bit of a boost here, up $1.63. We'll keep an eye on the pre-market high there at 56.21. Not much volume traded there. And then who else? How's Under Armour? Did you ever get in that, Spencer? I know you were looking at it at 18, 19. Did you ever get into that?
I nibbled a little.
Spencer.
Nice.
Spencer.
I got to stop doing this.
You were in earlier, though. Where'd you buy?
Where'd you get in at 19, 18?
Somewhere around.
You take some heat on it?
Somewhere around 20.
Hell yeah.
Yeah.
Yes, it's for his investment portfolio. He takes heat on that.
Long term. You don't mind taking heat in your investment portfolio. I don't mind taking heat in my investment portfolio either.
Okay. All right. 8:34 and 28 seconds. Do we want to do Constellation Brands real quick?
Let's wait till after our guest.
Okay.
So Chris Brecher is our guest today. He's with BrecherTrading.com, and I'm going to take a break and grab Chris. We'll be right back. Welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elkan, and Dennis Dick. Now joined by Chris Brecher from Brecher Trading. Chris, how's it going today?
Yeah, it's doing great.
So tell us what's on your radar. We were talking earlier about the results of the stress tests, and we were talking about Nike. What is on your radar this morning?
Well, I got to tell you, I know we were talking about it before, but if last night, before the bank stress test came out, before Nike's earnings, if you would have said Nike's going to be up $7, Citigroup, Bank of America, all of them way up, all the banks, you would have said, the ESs are going to be up 20. They're going to test 2740. They're only up 9 is really surprising in here. Plus, you have the German DAX up, which is like, if other people didn't know, is like the Dow Jones Industrials in Germany is up 100 points, and that's been leading to the downside. I'm surprised the ESs are only up 9 points. So sorry, I keep glancing to the left. I keep watching the futures on my screen here.
I'm completely with you here. And I think, there's a lot of catalysts to actually continue this rally here as well. Is that, we got the end of the quarter, we got potential window dressing coming here. I think you're right. I think, it's surprising. So I think one of two things is going to happen. These banks going to hold the gains, and the E-minis are going to play catch up, or they're going to start leaking the gains. So I think they're going to play catch up. I think the S&Ps are going to be stronger here yet today.
Well, I'll tell you, is every month on our site, we sort of game the rebalancing. Is the end of every month. I know you know about the Russell rebalance, which is mainly last Friday. You have the S&P rebalance, which is every quarter on triple witching. But every last day of the month, there's a rebalancing of all the hedge funds and mutual funds. That let's say they're a 50-50 split between stocks and bonds. If the market is way up that month, they have to sell stocks and buy bonds because the percentage of their stock portfolio is too high. That's why on the last day of January, there's a gigantic sell imbalance, and that carried over into February. Today, believe it or not, the market's almost unchanged for the month, the S&P, while the bonds are actually up a couple of points. So you actually might see a sell program in bonds and a buy program in stocks. Or it's possible that's why, I would think the ESs would get up and test that 2740 level again, or at the minimum, it's overnight at 2737.
Jump over here into individual stocks here. And what did you think? Let's just go talk the stress test results here, because the banks have been in the doldrums. They were down 12 straight days. We predictably catch the rally yesterday ahead of the results, because I'd just say if I was short the banks, I was saying I was even bearish. I wouldn't want to be short the banks ahead of those results, because we knew they all passed. We knew there was going to be some buybacks and dividends coming. Now we get the predictable rise here. Do you think this continues?
I think it comes down to the yield curve. Is if the yield curve stays right here and flattens, it's going to hurt banks. But it's funny about this is a lot of people are like, oh, buybacks, it's going to make Goldman Sachs go up. Goldman Sachs already said that they have a buyback, but they're not going to buy back stock for now. They said on their last earnings call, because they're going into infrastructure in here. But I really think the Citigroups, the Wells Fargos, they're not going to have this wild rally until after earnings, because there's a 5-week buyback blackout. They can't buy back stock till after their earnings anyway. So they might have a rally in here, a little rally. And I know every pundit 2 days ago on CNBC said, oh, they're breaking down. That's why I thought they'd go up. But I just think it's going to be a muted reaction until after they report earnings, when they can really go whole hog and buy back stock. So right now, I think they had their move up, or right up like Wells Fargo, right to resistance. But I think if we still have the bond market sit here and just flatten, I think that's going to hurt it's just going to be a muted move in the banks. That's the way I look at it.
We're on the line here with Chris Brecher of Brecher Trading. Chris, I just pulled up your Twitter feed here, and I see a picture of your workstation there. And boy, you got a lot of stuff on there. And what I'm going to ask you is, like, what's the most important thing you're looking at? I know for me, I got, the S&Ps up in my top left corner and my trade station here. You got a lot of stuff up there. I think I see a tweet deck. What is the most important thing on your screen?
Probably this charts. I watch a lot of correlations on our site. I really try to teach correlations. So Like if the German DAX is breaking under the 200, then it's likely that Dow Jones Industrials is going to break under the 200. So I watch a lot the futures. That's number one. I'm watching the futures. Then I have another screen where I'm watching all the FANG stocks, and I have up a 1 minute, a 15-minute, and an hourly of all the FANG stocks. As if they're acting great when the S&Ps are down like 10 points, like they did yesterday, you know the S&Ps are probably going to rally. The other thing on a different screen, I have up all the banks. Then I have up all the wild stocks, the Spotifys, the IQs of the world. And the most important to me is I have another screen that's all the futures. So I have up the QQQ, the SPY, the IWM. Then I'll have up a 1, a 15, and an hourly of the ES, the NASDAQ, and the RTY, which is the Russell futures, at least on how it's displayed on certain platforms, the ones I use. But definitely the futures first, and then the FANGs, and then the stocks that are in the news. And that's what we're usually trading in here.
All right. And then what are you looking to determine if the market's going to roll over today? We have a nice range in the S&Ps, about a 20-point range. For me personally, what I'm looking at, and it's not like a great, super extra good number, but I'm looking at mid-range on the session here. That would be a 27. We've had a 10-point rally. We've had the retracement. I see Thursday's close right in that area. So I'm keying off 27 here in the SEP S&Ps. What are you using to determine whether or not this baby might roll over? And someone in the YouTube chat thinks we're going to take out 2690 today. What early indicators are you looking at?
First thing I look at is the advanced decline, the New York advanced decline. So if we open up here where the ESs are up 875, let's say they stay between 8 and 1,000, and they start ticking up to, let's say, up 1050, up 11, and the advanced decline just is only up 500 and starts ticking lower, showing internal weakness, that'll be my first tell that we might start selling off. But I think the biggest thing is what you mentioned before. If the banks stay up here and the ESs are only up 875 and the banks start breaking, let's say, 2-minute ATR trailing stop, or let's say just roll over a little, I wonder how the ESs are going to stay up. So I think the banks, I'm trying to figure what made the market go up this morning, and it's the banks and Nike. If they start rolling over, I think the ESs are going to have a tough time today.
I was actually talking about this with Sean Udall, who's a little bit concerned about the overall market. And, there's a good chance that the overall market could be down, but the financials are up. So how are you at holding opposite positions? I know, Dennis, you could do it all the time. You trade delta neutral. How do you hold, let's say, you're long this Bank of America, but the market really starts to roll over. How do you decide? Because for me, if the market's going down, you got to sell everything. If the market's going up, you got to buy everything. How do you decipher, how do you separate yourself with stocks versus the overall market?
Usually what we do is just look for intraday relative strength. So if the ESs are up 1,000, and I see, this is why I have up a lot of screens. So I have probably 50 different charts of individual stocks I'm watching, the Spotifys. I'm looking to my left or right, the FedEx, the Caterpillar, the Boeing. And if they're looking poor on the opening when the ESs are up 1,000, then if the ESs start selling off, I want to take the stocks that are acting the worst. And those are the ones I'll short, because that way, in fact, sometimes I'll just, I'll buy, let's say, a Bank America, and I'll short something else. But usually if the market looks bad, I'll just go and short something, and the banks might hold up. So I'm looking at what I'm going to get the most bang for my buck with my equity today. And so if the ESs are up 2730, 2735, and the banks stop going up, so they form little reversal patterns like dark cloud covers on a 1 minute or 2 minute chart, then I'm probably going to look at the other stocks that refuse to go up at all day. And whether that's Federal Express, whether that's Amazon, whether that's Apple, I still wonder if Apple's going to try to go I know it's way up this morning, up over 186.40, but I wonder if that's going to try to go to its strike price at 185. And if that starts pulling down, it's going to pull down the NASDAQ, which could pull down everything but the banks. So
So sometimes I look at the indexes and, I see the S&P is trading up only 10 points. And I see, obviously a big portion of that gain is going to be some retail stocks with the great Nike earnings being up 10%. And the banks are a big chunk of that too, being up as much as they are. When you add it all up, that really means that there's going to have to be some laggard sectors or potentially some sectors that are down here today. If the S&P stay flat, if the S&P start rallying, then it could pull everything up. But if we kind of hang out where we are, which sectors do you think are going to be lagging here today?
That's a good question. I still think, and I've just come up with this lately, that a lot of the tech stocks I think is still the way to go in here on the downside. I'm not talking about the Amazons, but like the Intuits, the Broadcoms. I think that's where you're going to get the rotation out of the tech stocks, maybe into the banks. Maybe hedge funds are like, finally it's time to get into the banks. Let's rotate out. So I think probably the tech stocks are going to be the sell today if I'm going to pick something down. But I like that 3 reasons. So I want to see them have some reversal patterns on the opening or some little bear flags, even if they're on 1-minute charts. But I'm probably going to concentrate on the stocks that were weak already into really early this week, and they've been reacting to an oversold condition. So they're having tiny little rallies, like I said, like Broadcom, Intuit, and those will probably be the first stocks that I'm going to want to short if I think the market's rolling over. As I think you're right, though, it could be a big rotation out of the tech stocks and into the financials. Because, the financials have been down other than yesterday, 12 straight days. So that's what I think is going to happen.
One other question here. In the markets as of late, a lot of news coming out of the White House, a lot of tweets. They really cause a lot of movement in the indexes. How do you trade that? Do you not trade that? Do you just totally ignore it? Because you really, what happened? Was it on Wednesday? The SPOOs were just crashing down. It looked like we were going to have the weakest open in the world. And then they come out with the siffiest news. And it actually blew people. We ended up rallying over 30 handles for there. How do you handle the news and how do you incorporate it into your trading style?
Well, it's funny about that is you always look for tells to see if there were tells before those came out. And obviously that one, I didn't trade before the opening. That's the first thing, because a lot of the tweets originate before the opening. So that's a good way to get your head handed to you. I try to be pretty flat overnight for those reasons. But you're right. You had that tweet. Then you had Larry Kudlow come out and say, no, we're totally committed to the tariffs. And then the market sold off. But the biggest tell in there was that the ES has already hit some resistance, big old resistance at 27.45. And they started to show some reversal patterns. And before Kudlow talked, actually the advanced decline was already really rolling over to the downside. So that's where it comes down to when the ESs were up there before any tweets from Kudlow, you were looking for the weakest stocks because you were already at resistance. So that way, if you plowed through resistance on the upside, these were the stocks that refused to go up anyway. And if the market did reverse, then you're golden. But I'll tell you, before Kudlow talked, you had little mini head and shoulders tops in the NASDAQ and in Amazon. I posted about those, but they were already showing up. So then when Kudlow came out and the market started to reverse, those were the leaders to the downside. So usually I'm looking for tells within the charts. It seems like that's been working, and I always go on what's working now. But I also try not to have a lot of positions overnight, just in case.
So you're flat. Interesting chart pattern. Yule does in the pre-market chat here is asking about the TLT here, which is very, very important indicator for interest rates, also for banks. And I'm looking at the last 1, 2, 3, 4, 5 months highs, including this month at the 122.50 area. We gapped up into that. So technically we're at resistance. Any thoughts on the TLT?
Yeah, well, I'll tell you, this is what I thought 2 days ago. If the TLT, which is the longer-term bond ETF, if that rallies, you're getting close to an inverted yield curve, which then starts to scare people that we're close to a recession, which makes the Russell go down. So the higher the TLT goes, the worse the Russell is going to act relative to the rest of the market. That's been working great. The thing with the TLT, no doubt, the other that if it breaks here, it could go higher. There is that resistance from July and October right at this level. But sure, if it gets above here, it's going to hurt. I think it's going to hurt the market. It's going to hurt the Russell. And the Russell's been by far the leader in here. But that would also go with the thesis of rotating out of the real winners and going into the banks. If TLT breaks here, definitely, I'm putting it next to the Skype that I'm watching you on. It could definitely go to the 124 area, no doubt about it. And then you wonder, that could ironically hurt the banks because it'll make the yield curve flat. So the TLT is a big deal in here. It could rally in here. I'm telling you, though, I'm not trading the TLT. I'm using it as a correlation against everything else I'm trading, because when the market's moving 30 points, the ES almost every day, I don't see the reason to mess with TLT except as a great indicator.
Oil. How about oil? We are getting a lot of love here for you, Chris, here out of the YouTube chat. And Dennis is enjoying your tactics as well. Give us a quick thought on oil.
It's funny. I did a crazy ideas for 2018 where that one of them was about oil going to 80 because, and it's funny, one of the best technical analysts out there, Luis Yamada, was coming out and saying, I think oil's going to 78 or 80 after it was 70. But when it was 52, we were talking about it going up to that weekly resistance. I think, let me just put it up here so I could just tell you real quick, is when I look at it in here, I know it's at a new high. The key is to look at the weekly chart. And the weekly chart, the MACD is just turning up now from the 0 line. And there's an air hole all the way up to 80. And you just wonder, it's always about momentum. If oil just grinds up, nobody seems to care. But if oil spikes to 80, that's going to have real implications for the TLT. The TLT will not go up if oil spikes to 80, let's say in a week, because that just shows inflation. So I think oil, if oil holds here and has another leg up, I think that's going to definitely start affecting the TLT, which ironically, if that reverses at this resistance that you were talking about, it'll actually be good for banks because then the yield curve will steepen. So I think if oil holds here, it's good for the banks. I don't think it's good for the overall market because it'll show some inflation. Then you'll worry about tightening and all that. But definitely, if it holds in here, I'm just looking at a weekly chart. The real level is about 78. And it all depends on how it gets there. Is it going to be a spike like the last 4 days, or is it going to be just grind up there?
All right. Notice those cool guitars back there. Are you a guitar enthusiast, or you collecting these? You play them yourself?
No, I just have 2 guitars, and I played when I was in college. It's funny that I'm a trading person because I'm very independent. So a lot of times I wouldn't go to class, but I'd study twice as hard, and I just sit with a guitar. But I stink at guitar. It's like the only good thing I'm good at is trading, I think. But no, I have them more to for decoration.
All right, Chris, last one, and we'll let you go. Is there an index symbol for the advance or decline that you follow?
Yeah, I use the ADD, which is sort of ironic. It's probably describing me, but that's the New York advanced.
Me too.
That's the New York.
Forgot to take
that's the New York advanced decline, the net advanced decline. So instead of trying to subtract it all the time, the ADVN and the DECL, I just take the $ ADD for the net advanced decline. Now, let me just tell you, I chart that per minute. And believe it or not, you can actually use indicators like an ATR trailing stop or like a crossover in the 9 and the 20 with a 1 minute advanced decline. It actually works pretty well to show the internals, the trend of the internals.
All right, Chris Brecher. Brecher Trading is his site. You can find him there. Chris, thanks so much for the time today. Great interview, and have a good weekend.
Hey, you too. Thanks for having me on.
All right.
All right.
Hey, take care.
Let's get to some stocks here. Constellation Brands had some earnings and trading in the red.
Yeah.
Just before we go to stocks, I just want to say that was some great stuff from Chris there. You can tell, a guest when they get on, after 30 seconds of him speaking, you can tell whoa, this guy knows his stuff. You know, you get some guests, and sometimes it takes a little while to figure out whether they know their stuff or not. Some you just know off the hop. The guy is talking for 20 seconds like this guy knows his stuff. And what is he, you know, what differentiates him from, you know, some other guests? He's not a one-trick pony. He's talking charts. He's talking relationships. He's talking what affects this, you know, what affects that, you know, how that affects in the TLT. He's got the fundamental twist on it all. I mean, he's got all the tools in his toolbox. And that's what I try to stress to you on this show. We're a technical show. We talk a lot of charts. I believe in technicals as well, but you got to have more than one tool in your toolbox, I believe, to be successful in this game. I really believe the traders that are just trading technically here will struggle in the long run. In the short run, you can make some money. I mean, we're in a bull market. A lot of people making money because stocks are going up. But in the long run, you need more tools in your toolbox. Chris has a lot of great tools. I just followed him on Twitter just because of that interview. That guy blew it away.
I knew as soon as he said correlations, relationships, that your ears would perk up.
It's all relationship-based trading. That, you know, I say, you know, I do order flow trading, I do charts. When I really look at it all, I'm a relationship-based trader. I trade based on relationships. This is up because of this. This will go up because of this. I look to the leader for the information, and I trade what I believe will move off of that. And that's the edge. I'm trading the edge of the relationships. And there are people, a lot of people, who are going to be ignorant to those relationships. And that's the people that I'm making the money from. So understanding the various intricate relationships of what affects this. Some are simple, some are a little more exotic, but, you know, just understanding, even when I was trading, I don't trade them almost, but I realized after about 2 days of trading, I'm like, this HUYA is the leader of IQ. It's the leader of SOGO. It's the leader of them all. So I put that one on my screen. When it starts falling first, I'm like, okay, I'm going to sell IQ, or I'm going to sell these ones. And I was day trading those stocks very well doing that. I was day trading that IQ and stuff every day, just using HUYA as the leader. That changes. That isn't in stone or anything like that. But just because I identified that relationship, that short-term relationship, I had an edge on the competition. And those relationships, some are hardcore, some are forever. I mean, oil's going up, it's usually going to be bad for the airlines. I mean, those are basic relationships that a lot of people are going to understand. Sometimes those get crowded, they're so, you know, obvious. But, you know, some of these ones that aren't so obvious, those are the ones. You can identify a relationship early, you can have a nice edge in this market.
All right, Constellation Brands, we'll do that real quickly.
We would try to do that for a half hour.
That's okay. Q1 EPS, this is interesting. Q1 EPS missed.
It's going to drive you to drink, Spencer.
The Q1 EPS here missed $2.20 versus a $2.45 estimate. The sales were in line, so not a good Q1, but they raised their fiscal year 19 EPS outlook by $1. 9.73 was the fiscal year EPS, was the original, and $10.93 to 11.23 is what they said. So the EPS for the fiscal year way higher than the estimate.
Doesn't matter. We sell it off $10 here today, and that's why, again, you can't just be a one-trick pony. Stock has had a wall of resistance, 233, 234, 235 for the better part of 4 months. Now we sell off. We're going to go back down, maybe towards the support. But again, this market's been pesky. The trends have been persistent. Seems what's strong is strong. What gets stronger. What's strong gets stronger. What's weak gets weaker. I mean, if you were early on the Walgreens CVS story yesterday, you were maybe, you know, coming in, you know, WBA saying, oh, it's down $2-3. That's ridiculous. Well, it ended up down $6. So it's hard to be a fader of moves on an intraday basis. Overnight, some things different happen, trends turn, stuff happens, but it seems like, you know, when the ball gets going one direction, it can go for a bit. Nike continues to rally here. I think eventually it might even take out that 80. I think it's going to test it here today. Can Constellation continue to leak? Absolutely. So you got to be careful here when you're just saying, oh, this is going to be as low as it goes. It's going to turn, because it seems like it's very hard in this market to turn.
I will just say, and I'm not going to fade you on this, Dennis. I mean, someone has stepped up at the $220 area here since 8 o'clock. Here are your lows on your 15-minute brackets. Actually going back to 745, 20 and a half, 2015, 20 even, 1960. And then the support has moved up again. So I like that area. You know, if it comes back down to it, you know, potential buyers there. You don't know if they're going to be there again if they've come back up. Also, if you're looking for continuation on the upside, since making that 1960 low, your rebound high has been 24.46. S&P futures continue to leak here, Dennis. I don't know if we're going to get a chance to sell that rip that we saw in the pre-market trading. We are now leaking mid-range on the sessions. The banks are still holding up here, so I'm glad about that. I just hope I don't let the SPOO scare me out of this Bank of America position, but we'll see what happens. 9 o'clock.
One of two things has to happen here. There is just too much strength in the banks and too much strength in retail and too much strength across the board here this morning for the S&Ps to be where they are. So you are going to have a significant lagging sector here come. I tend to think it's going to be the consumer staples. You look in here this morning, TLT is relatively flat, but if we decide to go into a risk-on market, we know that kind of stuff starts to get hit. Consumer staples have had a pretty damn good run as of late. There could be some money rotating out of that, so just be careful. If the banks start to leak, then that trade will reverse the other way. So no matter, even if you hate the banks and say, I don't trade banks, have them on your screen here today. They are very important to this overall market. If the Citigroup and the Bank of America open and start to run higher here, it should drag the overall market up with it. It should bring us to a risk-on market. You should see some money flow out of some of the more defensive sectors. If the banks start to leak, if we had, Wells Fargo open up here 55.70 and all of a sudden it's at 55 or 54.5, then you get concerned that they are going to sell the rep. But I kind of tend to side on that. I think the market should get stronger here just because you're going into a quarter window dressing. So I tend to play on the side that I think we're going to hold these gains in the banks here today and maybe have a little bit of a risk on day. Nike, I think, is absolutely going to hold the gains. I mean, it's up $7. It's trade heavy volume. It doesn't look like it wants to leak whatsoever, which could help some of your retail stocks. But if the market stays where it is, it's going to be some weak sectors. I don't know if it's going to be tech. Maybe it's going to be tech. Tech had a pretty good day yesterday. I mean, coming back and like we were saying, holding those lows. So it's interesting that the S&Ps are only up as much as they are. I would have thought the S&Ps would be much higher as well.
Speaking about correlation trading, Chris Fromhertz, who's been on the show a few times, always pops in the chat. He was just talking about other correlations and relationships, and he likes to watch the China internet stocks this morning. China was up big last night, hasn't done that in weeks. See what kind of correlations have. So, Chris, thanks for hopping in the chat. Spencer, you want to wrap up today's show here at 9:03?
Busy show, yeah.
Preview Monday show.
We didn't even really get to analyst ratings. Well, there wasn't a ton to get through. Not really any notable.
Duluth, the underwear company, upgraded William Blair.
Yeah, Walgreens called a downgrade. That was predictable from Jeffries. Only one downgrade, surprise. Anyway, so not a whole lot in analyst ratings land. Just wanted to mention that this morning. But that's going to be it for us today. Everyone, thank you for joining us. Thanks to our guest, Chris Brecher. Great interview with him. Thanks to all of you who joined us in both of our chat rooms, both on the YouTube and at premarket.benzinga.com. If you want to catch the podcast of this show or just watch it again, you can watch it on YouTube or go to iTunes, SoundCloud, Stitcher, TuneIn, or Google Play, and you can rewatch or listen to the show.
Just before we go to Spencer, I just want to alert you, Alibaba falling hard here.
Yeah,
what's going
on?
What's going on with Baba? This
News
could hurt
me.
the tax.
News me.
News in Alibaba.
Got to be something.
Something.
Baba just falling out of bed right now.
Yeah, I just saw that.
$3 here. Something happened.
Something
so we're trying
happened.
To find, we're trying to find. Let's go try to find the Baba headline here.
Okay.
It just started tanking. It just hit my filters. That's why I wanted to bring it. We know we're going a little bit over time here, but I just want to bring this up. Try to figure out what is going on.
Is it related to blockchain? I'm not. Oh gosh.
Somebody said something.
I'm looking at my Twitter feed. I'm not seeing anything here. But we have lost a lot of altitude here. Closed at 88.38. Slow leak here. It's hard to give you a number here, folks, because we hit 82.04 yesterday. 84.89 was your 2-day low, so we'll keep an eye on that. But the real low of the move here is 182.04. I mean, who knows? Someone maybe dumped a lot of stock, or someone changed the rating at the last second. But boy, we continue to slide here. Just folks, if you're trading this and you're short, you want to try and bring it in. Just remember, 182.04 was the low from yesterday. Wow. That's another $3 away. We'll see if it gets there.
All right, what a way to end the show. But that's going to be it. Hope everyone has had a good morning. Hope you have a good rest of your day and a good weekend. We'll be back with you on Monday. Have a good one.